Listen, if you've been watching the software infrastructure space, you know something major is happening right now. While everyone's chasing the big tech giants, there's a quiet revolution brewing in the penny stock world that most investors are completely missing. We're talking about companies trading under $1 that are positioning themselves at the intersection of artificial intelligence, digital identity, and immersive technology. These aren't your typical speculative plays. These are businesses with real revenue, actual products in market, and partnerships with recognizable names. The kind of opportunities that, if you catch them early enough, could potentially deliver returns that make your portfolio look very different a year from now. Today, we're diving deep into 3 software infrastructure penny stocks that are generating serious buzz among retail investors, and I'm going to show you exactly why institutional money might start paying attention very soon. Before we get into the specifics, let's talk about why software infrastructure matters right now. We're living through the biggest technological transformation since the internet itself. Artificial intelligence isn't coming, it's already here, and every single company on the planet needs infrastructure to support it. They need ways to store data securely, authenticate users without friction, and create experiences that keep customers engaged. The companies building these foundational tools aren't always the ones making headlines, but they're often the ones making the most money. Think about it like the gold rush. Everyone remembers the prospectors, but it was the people selling the picks and shovels who built lasting fortunes. That's exactly what we're looking at here. Software infrastructure companies that provide the essential tools other businesses need to operate in a digital-first world. Now, penny stocks get a bad reputation, and honestly, a lot of them deserve it. But here's what most people don't understand. Trading under $1 doesn't automatically mean a company is worthless. Sometimes it means they're early stage, sometimes it means they've hit temporary headwinds, and sometimes it means the market just hasn't caught up to what they're building yet. The key is knowing how to separate the legitimate opportunities from the pump and dump schemes. You need to look at actual financials, real partnerships, genuine use cases, and management teams with track records. When you find companies that check those boxes and they're still trading for pocket change, that's when things get interesting. Let's talk about our first company, DataVault AI Inc., trading under the ticker DVLT. This is a data security and artificial intelligence play that most people have never heard of, but that's changing fast. DataVault operates in one of the hottest sectors imaginable right now, providing cloud-based data storage solutions with a specific focus on AI-powered analytics and security. Think about the explosion in data generation we're seeing. Every interaction, every transaction, every sensor reading generates data that needs to be stored, protected, and analyzed. DataVault has positioned itself as a provider of secure data infrastructure with AI capabilities built directly into the platform. What makes them particularly interesting is their focus on compliance-heavy industries like healthcare, finance, and legal services, sectors where data breaches can literally destroy companies overnight. They've developed proprietary technology that not only stores data but uses artificial intelligence to identify patterns, detect anomalies, and prevent unauthorized access before breaches happen. Their revenue model is subscription-based, which means if they can continue adding clients, you're looking at recurring revenue streams that compound over time. Recent filings show they've been expanding their customer base, and while they're still in growth mode, burning cash to scale, the trajectory is pointing in the right direction. The company has also been making moves in the blockchain space, exploring how distributed ledger technology can enhance data security even further. At current prices, you're essentially betting that secure AI-powered data infrastructure is going to matter more in 5 years than it does today, and honestly, that seems like a pretty safe bet. The second opportunity we need to discuss is the Glimpse Group trading as VRAR. This company is absolutely fascinating because they're not just betting on one aspect of immersive technology, they're building an entire portfolio of virtual and augmented reality businesses. Glimpse operates as a diversified holding company with multiple subsidiaries, each focused on different applications of VR and AR technology. They've got companies working in enterprise training, healthcare applications, education, entertainment, and even real estate visualization. The genius of this model is diversification. Instead of putting all their eggs in one basket, they're spreading risk across multiple revenue streams while maintaining exposure to the overall growth of the immersive technology market. Let's talk specifics. Their subsidiary D6VR focuses on location-based virtual reality entertainment, the kind you'd find in malls and entertainment centers. Another subsidiary, Glimpse Learning, creates VR training solutions for corporate clients, which is massive because companies are desperate for more effective training methods that don't require flying people around the country. They've also got QReal, which works on augmented reality for e-commerce, letting customers visualize products in their own space before buying. Early Adopter creates VR content for marketing and brand experiences. The list goes on. What you're really buying here is a thesis that virtual and augmented reality are going to penetrate mainstream business operations over the next decade. We're already seeing major corporations invest billions into the metaverse and spatial computing. Apple just launched their Vision Pro headset. Meta continues pouring resources into VR development. The infrastructure and content needed to support this transition has to come from somewhere, and Glimpse is positioning multiple companies to capture pieces of that opportunity. They've been announcing new partnerships regularly, expanding their enterprise client base, and their management team has been transparent about their growth strategy. Yes, they're still losing money as they invest in growth, but that's par for the course with early-stage tech plays. The question is whether the market they're chasing is real and growing, and all evidence suggests it absolutely is. Our third stock is AuthID Inc., or the ticker AUID, and this one might be the most immediately relevant to everyday users. AuthID is in the digital identity verification space, which has become absolutely critical as more of our lives move online. Think about how many times you've had to verify your identity digitally this week alone, logging into banking apps, accessing healthcare portals, making online purchases, even proving you're old enough to view certain content. All of that requires identity verification, and the old methods of usernames and passwords are fundamentally broken. They're insecure, easily forgotten, and increasingly targeted by sophisticated fraud operations. AuthID has developed biometric identity platform technology that uses things like facial recognition and liveness detection to verify that you are who you claim to be without requiring passwords or physical tokens. Their technology is designed to be integrated into existing systems, which means they can work with banks, fintech companies, healthcare providers, and really any business that needs to verify user identity remotely. The market opportunity here is staggering. Identity fraud costs businesses and consumers billions of dollars every year. Regulatory pressure is increasing, with governments around the world implementing stricter know your customer and anti-money laundering requirements. Companies need solutions, and they need them now. AuthID has been announcing integrations and partnerships that demonstrate real market traction. They're working with financial institutions, they've got pilots running with major enterprises, and they're expanding internationally. The company recently announced developments in their verified platform, which is their flagship product for passwordless authentication. What's particularly compelling is the recurring revenue potential. Once a company integrates AuthID's technology into their authentication flow, switching costs become high, and you've got a customer relationship that can last years. The company is also exploring applications in age verification for online platforms, which is becoming increasingly important as regulators crack down on age-restricted content. At current valuations, you're paying almost nothing for a company that's building critical infrastructure for the digital identity layer of the Internet. So what ties all three of these together? They're all software infrastructure plays addressing massive, growing markets. They're all trading under $1, which means even small movements in share price can translate to significant percentage gains. They're all in sectors where technological change is accelerating, not slowing down. And perhaps most importantly, they're all companies where the market might be underestimating their potential simply because they haven't broken out yet. Now, I need to be absolutely clear about something. Penny stocks are risky. These companies could fail. They could get acquired for pennies on the dollar. They could dilute shareholders to raise capital. Any number of things could go wrong. And if you're investing money you can't afford to lose, these are not the plays for you. But if you're someone who understands that high risk can come with high reward, if you're someone who's willing to do your own research and make informed decisions, And if you're someone who believes that software infrastructure is going to matter more in the future than it does today, then these three stocks deserve serious consideration. The software infrastructure space is heating up. Institutional investors are starting to pay attention to smaller players with unique technology. Retail investor communities are identifying these opportunities faster than ever before. The question isn't whether these sectors are going to grow, it's whether these specific companies can execute and capture market share. Do your own due diligence. Read the filings. Understand the risks. But don't ignore the opportunity just because these stocks are trading under $1. Sometimes the best investments are the ones everyone else overlooks until it's too late. That's it for today's deep dive. Make sure you're staying informed, making smart decisions, and never investing more than you can afford to lose.